Most VWAP bounces don't actually bounce. Price touches the line, you enter long expecting an institutional defense, and the line breaks within hours. The frustrating part, VWAP bounces do happen, they just don't happen every time price touches the line. There's a specific filter that separates the touches that hold from the touches that fail, and it's the same filter pros use across every level-based setup. Today, why VWAP alone is a coin flip, the volume signal that confirms real defense, and the Confluence stack that turns VWAP into a tradable level. Here's the VWAP logic. VWAP is the institutional cost basis from your anchor, typically the session open or a major event candle. Big participants below VWAP are losing money on average, so they often defend the line when price drops back to it. The problem, VWAP touches happen all day and not all of them get defended. Without an additional filter, you're trading every touch as if institutions cared when most touches are routine noise. Watch this in a synthetic session. VWAP sits at 103. Price touches it 3 times and breaks below each time. Each touch printed on flat to declining volume. No surge, no rejection candle, no participation. That's the chart telling you institutional defense isn't there. Touches without volume mean VWAP is acting as a moving average, a passing reference, not a defended level. Buying every VWAP touch in this scenario was a coin flip biased against you. Here's the principle that ties it all together. Volume is the only proof that institutions are actually present at a level. Without a visible volume surge at the touch, no one is defending that price. VWAP is just a line on a chart with no participants behind it. With a volume surge, real money is stepping in. That's why every Confluence-based setup we teach on this channel runs through volume confirmation, regardless of which level type triggered the entry. Volume is the participation gauge. Now the real bounce. Price drops to VWAP, but this time the volume bar at the touch is a visible surge well above the recent average. That surge is the institutional footprint. Combined with a rejection candle that closes back above VWAP, you have a high probability entry. Stop goes just below the VWAP touch low. Target the prior swing high or the measured move. Same level, different volume, opposite trade outcome. On a real chart, the highest conviction VWAP bounces show 3 things at once: the VWAP touch itself, a volume surge confirming participation, and a horizontal support level coinciding with the VWAP. 3 independent reasons for institutions to defend that price. When all 3 line up, the bounce holds. When only 1 or 2 are present, you are back in coin flip territory. Demand the stack before you commit. So, VWAP alone is a coin flip because not every touch gets defended. The volume bar at the touch tells you whether real money is present. Combine volume confirmation with a horizontal level for true confluence, and the same VWAP that frustrated you starts producing high probability entries. Subscribe for the full method and trade your own plan. Education, not financial advice.